Here is the next problem. Problem number 11. Quick Consumption Limited went into voluntary liquidation on 31st March 2015. So this company has decided to voluntarily liquidate. Liquidate means wind up the company. The balance sheet as on the date was as follows. We have liabilities, assets. On the liabilities side, 5,006% cumulative preference share of rupees 100 each, fully paid 5 lakh, and 2,500 equity share of rupees 100 each, 75 paid up, 1,87,500. Then 7,500 equity share of 100 each, rupees 60 paid up. So 2,500 equity shareholders have paid 75 rupees per share. 7,500 equity shareholders have paid 60 rupees per share. So they have paid extra 75. 2,500 equity shareholders have paid extra 15 rupees per share. Done. So next is 5% mortgage debenture, 2,50,000. Interest outstanding on debentures, 12,500. Creditors, 3,62,500. So here on the asset side, land and building, 2,50,000. Machinery, 6,25,000. Patents, 1 lakh. Stock, 1,37,500. Debtors, 2,75,000. Cash at bank, 75,000. P&L account deficit, 3 lakh. Totally 17,62,500. So next, coming on to the adjustments, the liquidator is entitled to a commission of 3% on all the assets except cash. So what and all the assets have been realized, on all the assets is liable for 3% commission, the liquidator, except cash value. Next, 2% on the amount distributed to unsecured creditors. So whatever the amount is distributable to unsecured creditors, on that value the liquidator is entitled for 2% of the commission. So if in the question there doesn't give anything regarding including of preferential creditors or excluding of preferential creditors, we are assuming that is including of preferential creditors, and liquidator is entitled for 2% commission on unsecured creditors and preferential creditors amount. Next, creditors includes 17,500 for income tax due to the government, and 5,000 outstanding salaries of employees, and an award of 15,000 made under Workmen's Compensation Act. So here one thing here, so the total creditors in the question is 3,62,500, that is given in the balance sheet. Yes, that is written over here, 3,62,500. So next, what and all they are given until from here till here. So these are all the preferential creditors. So here creditor means the company has to pay the amount for that particular person. So secured creditors, they will be having the security over assets, machinery or a building, etc. This preferential creditors means they doesn't have any security in the company. The company doesn't give any security for them, but the payment of that particular expense is the special, that is the payment of that particular expense has to be made before the unsecured creditors who doesn't have any kind of security. So this preferential creditors, see for example here they are given income tax. Income tax the company has to pay. For income tax we will not give any kind of security, right? For payment of income tax there is no security, and for paying of salary will company give any kind of security that I'll pay you salary? No. Next is award for compensation, workmen's compensation. These are all the expenses, they are all the creditors of the company, but they don't have any kind of securities. So if there is no security means we can't consider them as unsecured creditors also. So we will be considering them as the preferential creditors. Next, it also includes a loan for 1,25,000 secured by mortgage on land and building. So there is, so here secured creditors in the balance sheet is 3,62,500 minus preferential creditors 37,500. So it will be 3,25,000. So this 1,25,000 is a secured loan because they have a mortgage. Mortgage means they have security on the land and building. So here that means they have the security, they are secured also. So that means they are the secured loan. The secured loan is the secured creditor, 1,25,000. The remaining value will be the unsecured creditors. Done. On land and building, the preference dividends were in arrears for 2 years. So here the company has to pay arrears on preference dividend for 2 years. So what is the value of that is preference share? 5 lakh rupees. So what is the percentage of dividend? 6%. So how to calculate the arrears on dividends? That is 5 lakh into 6% into 2. So that will be 60,000. That is the arrears of preference dividend. So the assets realized as following: land and building 3 lakh, machinery 5 lakh, patents 75,000, stock 1,50,000, debtors 2 lakh, and liquidation expenses of 27,250. Prepare the liquidator's final statement of accounts. So let's first calculate the liquidator's remuneration. So here I'll be saying that is 3% on all the assets realized except cash. So here I've even done with the liquidator's final statement. Seeing with the receipt side, see here we have cash at bank 75,000, land and building, what and all they are given in the asset, that is question, what are the assets realized, you are supposed to take here. And in the adjustment even there is no cash value given, but in the question they are given, right? So will be, so in the balance sheet there is the cash value, that should be considered. So 75,000. So this is the value of receipt side, that is assets has been realized, it is 13 lakh. The value will be 13 lakh, but that is except the 75,000, except cash. So the value will be 12,25,000 multiplied by 3%, that is 36,750 is the liquidator's remuneration payable. Then so next is 2% amount, 2% on the amount payable to unsecured creditors including preferential creditors. So total receipt is 13 lakh, and then we are supposed to take until amount payable up to the debenture value. So I have done here, this is also I have done. Sundry creditor, secured creditors 1,25,000, remuneration liquidation expenses 27,250. Next coming on to liquidator's remuneration, 3% on assets realized, that is 36,750. This is not written, I'll be writing later after calculation. Next is outstanding interest on debentures 12,500. Next is 5% mortgage loan, that is of 2,50,000. Next preferential creditors, all we know we written, and unsecured creditors. So here till we are supposed to take until this 25,000, right? So until 25,000, till 25,000 the value will be 4,50,000. So when we add these value it will be 4,15,000. So the amount available for payment for preferential creditors and unsecured creditors is 8,48,500, but the payment of preferential creditors and unsecured creditor is 2 lakh plus 37,500, that will be 2,37,500, but the amount available is 8,48,500. This is sufficient for the payment of both. So when it is sufficient for the payment, the liquidator remuneration formula is so simple. So till 2,37,500 into 2%, 4,750. So it is 4,750. Done. So you know, as it is, we will be writing preferential creditors and unsecured creditors also, and preference dividend. Arrears will be calculated. Arrears is already calculated 60,000. Preferential capital, whatever given in the question, we will be writing that. Next, while creating the payment of equity shareholders, you should be careful that. So see here in the question, so this 2,500 equity shareholders have paid 75, and 7,500 equity shareholders have paid 60 rupees. So they have paid, this 2,500 equity shareholders have paid 15 rupees extra when compared to this 7,500 equity shareholders. So we are supposed to calculate the amount payable for equity shareholders. So amount available for equity shareholders, total receipt 13 lakh, total payment up to preferential capital will be 12,53,750, that is until over here. Next, this is the amount available for equity share holders. Next you are supposed to minus whatever the excess that has been paid by the 2500 equity shareholders. So that is 15 rupees. 2500 into 15, 37,500. So now this 8,750 is the value available for both the kinds of equity shareholders. This excess should be paid for 2,500 equity shareholders only, and this 8,500, this is 8,750 will be paying for both the kind of equity shareholders. So the distribution 8,750 multiplied, what is the equity share value for number of shares, 2,500 divided by total number of equity shares. Total number of equity shares 2,500 plus 7,000, right? Two types of equity shares, totally it is 2,500 and 7,500. And one more thing is that the face value of each equity share is same, so we are doing like this. If it is different, it can't be done like this. So done, it is 10,000. So 10,000, it will be 2,187. So for 7,500 equity shareholders, 8,750 multiplied by 7,500 divided by 10,000 is 6,563. So here is that. So I have written here, we calculated it. Excess, first we will be writing the excess 37,500 plus the value surplus. In the surplus how much is given? 2,187, that for 2,500 equity shares, and for 7,500 equity share it is 6,563. So this much is about this question. So for example, if in the question here you are calculated for completely for 2,500 equity shares will be paying 39,687. So for example, if they ask what is the number of what is the per value for one share, how much we are supposed to pay now, means how we will be calculating for 2,500 equity share, we will be calculating as what is the value available totally, that is 39,687. So what is the number of equity shares, that is 2,500. So here it will be rupees 15.87 is payable for per equity share. So here 2,500 equity share is there. For one equity share, finally only 15.87 will be paid. Same way for 7,500 equity shares. So amount available for this 7,500 equity shareholders is 6,563. What is the number of equity shares, that is 7,500, that will be rupees 0.87 is the per share value they will be getting. So this is calculation of per share value, per share payment at the final, how much is the per share payment. So if it is asked only, we will be preparing. If not asked, there is no need of preparing this. So this is all about problem number 11. So thank you. If any doubts, please ask me. Okay, thank you.